Hey, good afternoon. This is Trader Tim from over at eMiniMind, doing a Monday market analysis video. Today's June 7th, 2021. This week we have a couple of important news announcements coming out. The CPI on Thursday, JOLTS report tomorrow, and then next week we actually have the FOMC meeting, and then that announcement will come out on Wednesday. And while it's not expected that there will be, any change. I think we might see some pause in the markets leading up to that announcement. Not so much of what they're going to be changing or not changing on Wednesday, but their sort of sentiment going forward, looking out the next 6 months. We tend to get a bit of a sell-off. We have in the past year on those FOMC meeting announcement days. Some of them have been rather large, especially if you go to June of last year. So you may want to look at putting on some put protection as a hedge going into the announcement. I don't really trade the announcement itself because it can be kind of wild at 1 o'clock in the afternoon there. But put protection is always good, especially as we're up here near highs. And so on the daily chart here on the ES, when we're at highs, as we are, sometimes what will happen is if we make a new all-time high in the ES, we'll go into this sort of series of gap ups, and we kind of had this back here with a couple of big body days and gap days. So watch for those, especially if we come up close to this negative 23% target. So around the 43,000 ES, and that's if we break highs, because that gap up and go, and then the next day gap up and go, and sometimes 3 days of gap up and go can be a bit of an exhaustive move. Typically, when you gap up at highs, you can look for short setups early on in the day. But if you're not getting any short setups, if you're gapping up and going higher, then you don't want to be trying to sell that intraday. I would prefer to, when I do buy puts as a hedge for a long-term position, I do that at the close of the day, typically on that, you know, up day exhaustive thrust after a run up. So kind of be watching for that as a possible scenario for us to move into new highs and then run up to this 43,000 area. Another scenario, if you look at these pullbacks that we've had, they've really only been 3 days or less of a pullback, and in the process, we kind of call this a double bottom and then a higher low, and then here we have you call it a triple top, if you will. So there's definitely momentum to the upside, but when you have we'll just kind of connect these two lows to make an uptrend line for this example. When you have a swing low with nothing below it except for the final low, I guess we don't even need this trend line really. What I wanted to highlight is this is the only swing low before the double bottom back here. So if we were to get some selling, maybe off of that CPI number on Thursday or some other catalyst throughout the week, we could quickly drop back down to this 4,000 level and kind of continue this box or range that we're in. So another reason to just kind of make sure you're not overly swung to the bullish side. If you're managing a basket of stocks, it's always nice to have a couple of shorts in the mix. And if you're intraday only, then it's good to keep an eye on these swing low price levels, because if you're just looking over here, at the 512 tick chart, and you're zoomed in really far, and all of a sudden you're breaking, in this case on the ES, it's a 41.65.25. If you break that level, but you've been going down for a little while intraday, you might say, oh, we've already come down 10 points. That's too much down movement. I don't want to take a short. But at that same point, you might be breaking a bigger level, and you might see another 40-point drop. So important to kind of, as you go into the day, keep an eye on or just make a note of those swings. What I like to do in toss is have a separate chart for gaps that I mark the prior unfilled gaps, and then once we cross that level, I can just delete it. But this way I can see all of the prices that have not traded since gapping. And you can see at this point, we're so close to highs that all of the unfilled gaps are below us. Wanted to jump into today's price action for just a couple of minutes. And if we go, let me pull up my chart here, my log. So 2 trades this morning. The first one was a short, and we set up here. This line is the bottom of the first 30-minute range, this gray line. So we gapped up just slightly, filled the gap right away in the first 15 minutes, and then moved down another 4 points or so from there. And then we set up here in a short, but we had just solidified sort of the bottom of this first 30-minute range. So I waited for us to be underneath the bottom of the range and actually went here for the short and got a 3-point first target, and then I trailed my stop, trailed the next 61.8 like that, and then I drew it up again the next one and put my stop above that 61.8 for getting taken out. You could use the swing high as well. Today I just ended up using that next retracement as the exit point. And then the second one, so interestingly enough, the breadth today, both on especially on the NASDAQ, it's been pretty bullish. NYSE has been more flat, but still bullish on the AD line. And so I was looking, kind of expecting us to bounce and make our way back towards the close from Friday. And we've got still a little while here before the markets close on the day, but we're a good 4/5 of the way through. So but early on in the day, I was waiting for us to kind of maybe put in the low ticket lows or break some kind of swing high and turn around a little bit. We didn't end up really getting a low ticket lows, but we did break the swing high after that short ended, and I did take a long like this. We came up and broke the anchor points high, so at that point, this wasn't high enough to get a first target of 3 points, but when we break the anchor points high right here, then I just move my stop to break even because I don't want the trade to come all the way back down and then possibly break trend. So came away with nothing on that one, but no harm, no foul is always a good approach. So look for that swing high. When that breaks, you can move your stop up to break even. And the reason or the way I get to that is if you would draw the next retracement that was developing and look at the 61.8 and then subtract a tick or round down, subtract a tick, that gets you to right around here, which the 42.1950, which happens to be the entry price. So rather than going through that whole process of trying to draw up the next retracement when it's really small like that, as soon as we break the swing high, I can just drag my price up on the trade ladder, and then I can go into the chart and do a little bit more fine tuning if I need to. But when sometimes these trades are happening fairly quickly and you might only have 20 or 30 seconds to make an adjustment, and so the simpler you can keep your trade ladder and your charts and your management throughout the trade, the easier it is going to be, and then the fewer mistakes that you're likely to make. So that's what I have for you. Tomorrow we'll be doing a live trading session. You can check that out over at eminimind.com/VIP. And as we go back to the daily chart, just remember that we are in a pretty strong uptrend, but it doesn't mean that we can't take shorts intraday if the trend sets up that way. So you're going to see a change in trend begin on the smallest time frame. So you'll see it on the 512, then you'll start to see it on the 5 minute, the hourly, the 4 hour, and then you'll see that trend change on the daily chart. So it's helpful to, even if you're not necessarily day trading, if you do look to a little bit of a smaller time frame, you can maybe get a little bit of a glimpse on some trend changes that might be developing on swing trades as well. So I hope everyone has a great week. If you have questions, drop them in the comments below. Thanks and have a great week.